What's up, traders? Welcome to today's Equity Empire Chart Analysis session. When most investors are throwing darts, we're looking for clues in the charts. My name is John McHugh, a former Wall Street analyst, hedge fund manager, and independent trader for the better part of 20 years. Today, we're going to be taking a look at the chart on surgical robotics company Intuitive Surgical, symbol ISRG. And when we take a look at the chart, we're going to be simply looking for two things. One, is there a support level where we could get a quick bounce trade? Or is there a support level where we could be looking for a cheaper entry price for a longer term position? So let's get right into the action here. See if we can find a support level, okay? So Intuitive Surgical had a rough day today. It was down about 6%, 28 points it was down today. And the reason Intuitive Surgical was down is because the CFO warned of dynamic tariff environment. What that means is the tariffs were going to have a bigger impact, potentially, on their profitability than originally thought. And investors don't like that kind of uncertainty, and they don't like the possibility of compressed profit margins. And that's why the stock is selling off. Now, that could create a buying opportunity here. So we'll look at the chart and see that there is a support level that we're currently in. So we're currently in a support level. So we dropped down into the support level on that negative news today, and that is a price range between 449.47, 414.99. That's a price range that last time there was a tariff tantrum was in early April, and we gapped down into the middle of this support level and bounced off it meaningfully. So we bounced about 130 points from the middle part of that level last time we got to this level. Okay. So maybe there's an opportunity here for the same kind of bounce as the tariff news gets more clarity about the tariff impact, or if the company can make some adjustments to their supply chain or potentially pass on some of those tariff-related costs in the terms of price increases. Okay, so there's a lot of things the company can do to mitigate those tariffs, but this is not a fundamental analysis session. This is technical analysis session. So we're in a support level right here. There could be a trading opportunity that we're currently in. So if we're looking to buy the dip, this might be a chance to buy the dip. Now what I'm going to do next is find another support level. And there's a really interesting one right here, because here's the breakout point. We had a peak in late 2021. We tested it once in July of 2023, and we broke out above that prior peak in January of 2024, and a few months later came back and tested the breakout point and then took off to all-time highs. Okay, so that's called the breakout point. It's really interesting because there's another support level that happens to reside right on top of that breakout point. So 385 to 365, there's another support level. So two opportunities, or two support levels to consider, once again, for either a quick bounce trade or lower entry prices, a good discounted price for a longer term position. So two support levels to consider. Let's go look at resistance now. So there's a resistance level, a technical resistance level right here between 540 and 567. And then there's another technical resistance level just above that. And that is in the 616 to 586 price range. So two resistance levels, two support levels to consider. And how would you construct a trade once we've identified two support levels and two resistance levels? Well, one would be, consider this. We bounced off it meaningfully last time that there was tariff-related concerns. So maybe we get a similar type bounce here. So if you wanted to, you could place a buy limit order right at current price. Or you could have a market order at current price. Protective stop just below that level there, and the target goes just in front of the resistance level. So that trade setup right there has about a 3.47 to 1 reward to risk ratio, which is a pretty favorable reward to risk ratio. You want to have trade setups that have more reward potential than risk. So for every $100 worth of risk you take in that trade, there could be $347 of reward potential. So that's one potential way to trade ISRG. And the other one would be to place a buy limit order at the 385 level. So I'll draw that one too. So that would be placing a buy limit order at the 385 level, protective stop just below that level, and the target would be in the same place. This one's going to have a lot more reward to risk potential, but it's got less potential of actually getting filled. It might not get back down there, okay? But that trade set up as a 6.44 to 1 reward to risk ratio. So if you wanted to go for this upper level trade, you'd be hoping for something like this. So after this big sell-off, hoping that we get the buyers to step up again like they did in early April, for them to step up and take the stock higher, kind of like they did last time. So this would be trade setup number 1, and that would be the ideal way that that would play out. Your protective stop, by the way, would be just below that level if you wanted to take that trade, okay? Right at that red dash line. And if you wanted to go for the lower level, we'd be looking for price action that looked a little more like this. So more continued downside to the breakout point, or that level just above the breakout point, and then bounce off of that level before heading higher and testing, once again, the same resistance level, okay? So 2 potential trade setups to consider here on buying the dip in ISRG. So let's wrap up the session. Hope you enjoyed the session, everybody. If you're new to trading, hope you learned something. I'll be back several more times this week for more technical analysis. In the meantime, wishing you all the best of luck in your trading and investing.